Are you trading market structure shifts wrong? I'm going to tell you. Most people are, and they're hard to figure out. So we're going to go through a few examples to see what market structure shifts really are. They're simpler than you think, and one key phrase that I tell myself when looking for a market structure shift, one thing I tell myself every time is it's the last low that made a high or the last high that made a low. And I'll kind of show what that looks like. I think I've already lost my place. I had a few examples. Friday. Let's go to Friday. So Friday's the first one, even though I just had one on my screen. We'll go back to it. All right, so here's a low. The last low that made a high. So here's a low, it made a high. But also, here's a couple lows, and it made a high too. And then it came down and broke through all those lows. And where is it this? Is it this low? Is it this low? Is it that one or that one? Which one's the market structure shift? So this one's a little easier because it has such displacement. It kind of breaks them all before retracing anyway. So like any guess is good, right? But the actual shift point is here. And that's because this low, how do I say it? Let's go look at it backwards. So you're looking at prices coming up, makes a high, and you're waiting for it to shift. Makes a high, you're waiting for it to come back down and shift. Finally makes a high, and then shifts. The highest high that took place before we started coming lower, whatever low made that highest high is your shift point. So as you're watching this form, you see this high, and it never gets broken, and then it just goes boom. You're like, okay, where was the market structure shift point, or where can I expect it? You can have this drawn out because it's the last low. We made a high. We haven't made another high yet, so the low stays the same. I can show you. Let's do it like this. I'll walk you through it, right? So right now, I'm sitting here thinking this is the last low that has made this high. How high is this high going to go? Let's see. All right, so now we got a new low. Hasn't made a new high yet. There's a new low that made a new high. So we move it up to here. This would be our market structure shift point now. Got a new low, and it just made a new high. So now this one, this new low right here, we zoomed in enough. That new low right here made a new high, so it's our market structure shift point now. Let's keep going. We hit our high time frame PD arrays up here, so maybe this is a good time to turn around and reverse. We'll see. So we got that high up there now. Oh, it's coming back down. Maybe we're going to shift. Okay, we've made some new swing lows. Let's see if it makes a new high. Nope, it doesn't. It broke this low instead. So now you know this is your market structure shift point. You see how I did that there? So now we're just looking for a retracement, right? As you were following your trade plan. We're breaking pretty low, but we haven't really taken any liquidity. There's not even fair value gaps here to worry about down here, but we aren't there yet. And it retraces up into this fair value gap. Boom, boom. And off you go. So let's go all the way back to Thursday, and I'll show you another example. I think that's the one we just did. Yes, I picked these ones out because they're good examples. So right here, kind of the same thing. We make a new high. This new high, every time it makes a new high, it's making a new high. The concept that I'm looking, this mic is like right in my face. The concept I'm looking for is that it's taking liquidity, right? So this new high has taken liquidity, and it has done so 1, 2, 3, 4, 5 times. At any point, we could be expecting it to turn around when it takes liquidity. So this one, it's kind of the same thing, right? So we've come from, oh, here's the next one. Let's start with this one because it goes from one market structure shift to the other one. So we've come super far down, and you're like, I wonder if it's going to turn around. And it does all of this, and like, this is great. It does shift structure because this is the last high that made that lowest low. It hasn't made any further lows and has broken that high. So we've shifted, but we never retraced into anything to take an entry. I mean, maybe if you're getting really technical, I didn't plan to talk about this one, I guess. We broke this high with this candle with good displacement. You want good displacement with these two. You've noticed the last examples have had some big candles. You want some displacement. You want it to be like, yep, we're shifting now. And so this one shifted, and then 2 candles later dipped down into this little fair value gap. So this one, I guess, did exist and is a good example. So then we came back down, tapped into this fair value gap, which could have also been a good entry, but this low didn't take any liquidity. So this is the example I wanted to show, is it tapped into a PD array. So you can take liquidity, you can tap into a PD array, and then turn around and you can shift, market structure shift from it. Because at this point you're expecting, well, how far down are we going to go? You know it's over when we break the low right here. We broke the low. We hit a PD array, and then we broke the high. So we've shifted, right? So this was the last high that made the lowest low. And if you were to follow this and move your line down and down and down, you wouldn't have moved it any further lower than this. This was the last high that came up. We made a low. We never made another low in order to move you down to the next high. So we shifted, retraced. I think this is pretty close to 50%. Hit some PD arrays, and off we go. So we came up here. I don't know. We turned around for some reason up here, but the point is we made a high, made a higher low, made another high, so on and so forth. We made another high and never made another new one. And we broke this low with displacement. Now you're probably thinking over here, why wasn't that a market structure shift? This low made a high. We never made a new high, and we came down and broke the low. Look at this. After the high, we came down, retraced a little, came down, retraced a little, came down. Do any of these candles, well, first of all, does this leg look like displacement? Does it look like it's really wanting to shift? Look at how slow it's descending, and the candles are so small. Compared to this one, as soon as we got up here, it shoots down, barely retraces at all, and shoots down again. And if you were to continue to follow it, doesn't retrace at all, shoots down again. Like, this is much more intentional than whatever this is. So just because we get a candle close under the low doesn't always mean we've shifted. You want to see displacement. I mentioned that on the last couple examples. They're all big candles that bust right through it. You want to see that displacement. This is a little more ambiguous. Yeah, sometimes you'll see that it works. But if you're looking for high probability, you want to go with something with speed. All right? So this was the last low. that made the last high. So we're up here waiting to see if we make another high so we can move our structure shift point up to this low, but we never did. So we never made a new high. It came down and broke that last low. That's your shift point. Do we get a good entry? Not initially, because we break it here. So we're waiting for a retracement after that. We never really come up into anything. Kind of here, I guess you could have probably gotten, if you're skilled enough, gotten something here. Otherwise, the obvious one is right here. Either one works. And you take it down for a few points and it ends up bottoming out right in a fair value gap. So keep an eye on those. And that's all for the examples that I have. There's two other terms that I should have mentioned at the beginning of the video. There's two other terms that you're going to hear. You're going to hear market structure shift. You're going to hear change of character. And you're going to hear break of structure. It's really basically all the same kind of stuff. And you don't ever use change of character. Change of character is a market structure shift. It's just not ICT's term. It's the smart money term or whatever. So this market structure shift is a change of character. It is the character of the market is bullish. It is changing character to a bullish trend. So that's why they call it that. Break of structure is not a term that you're really ever going to use. I never do. Wow, I don't know what that did. Wow, I don't know what's happening. I just woke up. So I don't know where my example is. I don't know what I'm looking at anymore. What happened? Oh, we're at current day. Well, let's go back a little bit so I can show you what break of structure looks like. So break of structure is a trend term, really, right here. So we shifted structure and then retraced a little bit. So we left a low here and made a new high. Following the trend, as we continue to break lower and lower and lower, or higher and higher, depending on what the trend is. Every time we break a low, that's a break of structure. Boom, 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 all the way down. So as you're watching a trend, you want to see breaks of structure to your direction. You want to see in a bearish trend, lows broken, lows broken, lows broken. That's a good sign. That's a break of structure. You don't want to see a break of structure to the upside, which technically then at that point would be a market structure shift. And then it's an indication that you're no longer bearish. And if you're wanting to continue bearish moves, you want to continue to see breaks of structure to the downside and not to the upside. So that's all a break of structure is. It's kind of just an inherent, thing that you're already looking for, thing that you're already aware of. It's just putting a name to it. I don't really label those things. I don't really use that a lot because that's already what I'm wanting and already kind of what I'm watching. If I'm in this trade, I'm like, we're making new lows. Very good. We're moving down. We're making new lows. All I'm really looking for at any given point, whether it's to enter a trade or to exit a trade, is a market structure shift. If I'm coming down here and the last low was made by this high, so even here we didn't break it. But if we broke this high, I'd be looking to probably get out of my trade, which didn't happen. Let's see. Really until like here. But even so, it didn't really break market structure to the upside. The last low, the lowest low was made here. The high that made it was here. So until we break this line, there's no, and that's not even with displacement. So I wouldn't even worry about it yet. And, and we're getting into the lunch consolidation. That's got a little bit of displacement. It's just solid green candles all the way up. So I might start getting concerned there. But if we came, these two candles, I would start thinking, and then the day ends anyway. But you can see, like, we're not really breaking any structure until we get out of this range. So I wouldn't feel bad holding a trade through all this, other than I'm sitting through consolidation and nothing's happening. I'd probably want to exit. You know, like it hits this low, makes a high, makes a low, makes a higher high here. Probably good idea to get out here, just because we're starting to break highs and we have no idea if we're really going to come back down or not. It's getting close to lunch. So like you can kind of read all of that stuff and be like, yeah, that's a good time to exit. So the only time I really the only thing I'm really looking at is market structure shifts, whether to enter or to exit a trade. I don't care about break of structures. Change of character is not even part of our vernacular for our concepts. So that's too long of a video. Hopefully a quick explanation of market structure shifts. So now you can do them right. Alrighty. Thanks for checking it out. Have a good day.